everyone, this is Crystal with Slate Trade, and in this presentation I'm going to go over my pure price action presentation number 3. In today's lesson we're going to cover risk to reward, multiple positions, and trail stopping. As always, we must start with a disclaimer. Feel free to pause the video and read through the entire disclaimer, but when trading any financial asset there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. Risk to reward. Creating a Forex trading plan is one of the most essential parts of being a successful trader. If you go into the market knowing your set rules and your risk to reward, then you will be much more confident in the entry and exit of your trades. My game plan in this presentation is to teach you how to set multiple positions with a 1-to-1, 2-to-1, and 3-to-1 risk to reward, along with how to effectively trail stop. 1-to-1 risk to reward allows the trader to break even with a 50% win rate. That's the same as a flip of a coin, okay? An example of a 1-to-1 position would be a 20 pip stop loss with a 20 pip take profit. The 1-to-1 position is usually my first position of 4 when trading and closes once my first and lowest take profit is reached. This is the one and only position that I never trail stop, okay? Now a 2-to-1 risk to reward allows the trader to break even with a 33% win rate. Now that's pretty good, okay? So even if you don't have a very effective strategy, if you're using good risk to reward ratios, you're still going to more than likely be a profitable trader, okay? So an example of a 2-to-1 position would be a 20 pip stop loss with a 40 pip take profit. The 2-to-1 position is usually my second position of 4, and most of the time I begin trail stopping this after a positive 10 pips has been reached, okay? So if the position turns against me, all right, it reaches a break-even point, okay? And from there, if the position continues in my favor, I'm going to trail stop it approximately every 20 pips or so. Now, a lot of people ask me, how many pips do you trail stop? How many pips is your take profit and your stop loss? Now, this ranges, okay? 1, depending on the strategy. 2, I don't look at a certain number of pips, okay? I look at this risk to reward ratio, okay? And I look at previous support and resistance and previous supply and demand zones, okay? That is what determines my stop loss and take profits, okay? So this is just a general, okay, around 20 pips or so. A 3-to-1 risk to reward allows the trader to break even with a 25% win rate, okay? An example of a 3-to-1 position would be a 20 pip stop loss with a 60 pip take profit. The 3-to-1 position is usually my third position of 4, and the stop loss is normally moved after a positive 20 pips, okay, in case the position turns against me. And again, from there, I trail stop around every 20 pips or so. Opening multiple positions. Why do I do it? The reasoning behind opening multiple positions per trade is to reach each of the risk to reward scenarios and to maximize and lock my profit to its highest potential, okay? This is what you're doing for a living, all right? You want to make sure you focus on that and get a good plan in place, and this is the plan that works for me, okay? By using a break even and a trail stop, I ensure that I'm gaining maximum pips and I'm using solid risk management. As a trader, you want to be in control, okay? So what is trail stopping? In my previous presentation, I talked about trail stopping. I gave a brief explanation let you know what it was about. However, I want to go into a little bit more depth in this presentation. Trail stopping is an advanced type of stop loss order. It reduces the risk of your trade as the trade progresses. As the trade moves in the trader's favor, the stop is adjusted to a more favorable rate. Other than my first position, my 1-to-1 position, I pretty much always trail my stops, okay, unless if I'm not at the computer or I don't have, like an auto trader running. If it was a manual position that I entered, sometimes I miss out on that, okay, and then I only get the 20 pips or whatever it is that I set it to, okay. Dynamic trailing stop. This is the most commonly used, most commonly known as well. For every 0.1 pip the trade moves in our favor, the stop is adjusted. A fixed step trailing stop is similar to the dynamic trailing stop. However, it bases on a set number of pips. If the trader enters 20 pips, then the stop is moved every 20 pips, and it must reach that 20 pips to move the original stop. With that dynamic trailing stop, it's moving the entire position, okay, or the entire duration of the position, okay. So you find it works best for you. Now, if you are a Slick Trade Sapphire member, then you have an expert advisor called the Trailing Stop, which has more advanced features. And all of our expert advisors have that lock profit feature, which you can turn on. So when a position goes into your favor, it's using kind of an in-between of a fixed step trailing stop and a dynamic, okay? It's basing on a percentage, and it reaches a break-even point, okay? So once it reaches that, if it continues in profit, you're going to continue to gain profit on your position. If it goes in your favor and then it goes against you, it's still going to break even for you, okay? So before I go to that, in my next lesson, I'm going to be covering ascending and descending triangle patterns. In the next few lessons, I'm going to be talking about different patterns with some of the highest win rates, okay? And if you're using good risk to reward, you're going to be profiting on a weekly, monthly, yearly, whatever time frame it is that you look at, unless if you're just looking at daily profit. Unfortunately, I don't think that's a very good way to look at the market. I like to do a weekly analysis and then a monthly analysis. That's kind of my, what works best for me. But I also like some longer term trades, okay? So, let's go ahead and bring up my MetaTrader 4. Okay, so what I was talking about is if you bring up your navigator here, if you're a Slick Trade member, then you're going to see the Slick Trade trailing stop, okay? And then you can add this to your chart, and you can have it trail your current position, okay, that's open on that chart. Or if you want all of your positions to start trailing, you can go ahead and choose true for all positions, okay? Now there's some different inputs here, and excuse me, if you're not using one of the auto traders to actually auto trade your account, let's say you're only using it for signals, or you're only using the signals provided on Twitter and to text and things like that, then you can go ahead and use this trailing stop, okay, to manually enter your trades, and then they're managed here. Now all of our expert advisors have like the lock profit feature, all the different trailing features, okay? So if you are auto trading, you also have access to that, obviously, but this trailing stop is a cool one if you are a manual trader and you aren't going to be at your chart for a while, okay? So you would just add this to your chart, you choose OK, These different inputs here are described under your under the document on the Expert Advisors post, okay? So it goes into detail on what each of these is, okay? You can add that to your chart, though. If you've manually entered trades, it's going to go ahead and manage it for you from there on out, okay? So I will see you guys next week. And like I said, I'll be covering ascending and descending triangle patterns. We have a lot of really great lessons coming up. Now that we're past the point of a lot of the kind of terminology and a little bit more bland topics, we're going to be covering some good stuff, you know, that's really going to help you to profit in your trading. That is going to give you some really good insight. It's going to give you, you know, some different strategies to follow. Okay, so now that we're past these first three, we've got a lot of really amazing things coming out. Okay, so get ready for it. Go back through the last three lessons. Get yourself ready to start trading. Okay, so I'll talk to you guys later, and you have a good one.